Hello everyone. In this class, I am going to teach you about a recording of transactions. Means how we have to record the transactions and what are the steps involved in recording the transactions. In that first step, that is identifying the transactions. Means we in the first step we need to identify the transactions. And which type of transactions we need to identify? Here we need to identify the transactions that are expressed in monetary terms. Fine. Means a transaction in any business activity or event that has a measurable financial impact on the organization, and it must involve the exchange of value between two parties. Fine. Like purchasing inventory and paying salaries or receiving revenue from the customers. Okay, these are all the examples of transactions and these are expressed in monetary terms. See here, transactions must be quantifiable in monetary terms to be recorded in the accounting system. Okay, only these type of transactions we need to identify and we should record in the accounting system. And second one, that is transactions are evidenced by an appropriate documents. Only those transactions we need to be identified. Means the transactions are evidenced by an appropriate documents such as cash memo or invoice or any sales bills or any bank statements or salary slip. Fine, these are the examples of evidences. These are supporting the transactions. Okay, so a document which provides evidence of the transaction. A document which provides evidence of the transaction is called the source document or voucher. Fine. This is about first step, that is identifying the transactions. Okay. Now we will move to the second step, that is analyzing the transaction. What it says, after identifying the transactions and after identifying the transactions means in this we need to identify the transaction that are expressed in monetary terms, and second one, these transactions are evidenced by an appropriate documents. After that we have to analyze the transactions. In analyzing the transactions, first we have to identify the accounts involved. So, we need to determine which accounts are affected by the transactions, like cash or sales or rent expenses. These are the accounts we need to determine which accounts are affected by the transaction. Fine. And second one, that is determine the type of accounts. First one is identify the accounts involved and determine the type of accounts. See here, type of account means we have to classify the accounts as whether they are assets or liabilities or equity, revenue or expenses. Fine. These are the classification of accounts. And after that what we have to do? We need to apply the debit and credit rules. See here. After identify the accounts involved and determine the type of accounts, we need to apply debit and credit rules to determine their nature. See here, this debit and credit rules, in the next class I will explain the rules of debit and credit rules in detail. Fine. Now just I will tell the steps involved in recording the transaction. So here this analyzing the transaction, this step I will explain through one example. See, that is payment of rent for rupees 800 in cash. Okay, in cash. Now we need to analyze the transaction here. See, in analyzing the transaction, first step, that is identify the accounts involved. Here how many accounts are involved? See here, first one, that is rent accounts involved. First one, rent account, and second one here, cash. We are payment of rent for rupees 800 in cash. We are paying the rent in cash. Fine. See here, the paying rent which increases its expenses, which increases the company's expenses, and cash decreases. Why? Because payment is made in cash. Payment is made in cash. Fine. So here accounts involved rent account and cash account. After identification, what we have to do? We need to determine the type of accounts. See here, rent, it will come under expense. Okay, rent will come under expense, and cash. Now we have to classify the accounts as whether they are assets, liabilities, equity, revenue or expenses. Rent will come under expenses account, and cash, it will come under asset. Fine. So now third step, that is we need to apply debit and credit rules to determine their nature. Now we need to apply debit and credit rules. See here, rent expenses account or rent account, that is increases debit, that is rupees 800, and cash account, that is decreases credit, rupees 800. Okay, see, this expenses, business is paying the rent expenses which increases its expenses, and cash is decreases because payment is made in cash. Fine. Again I will explain. See, the example is payment of rent for rupees 800 in cash. First one, that what is the step? Identify the accounts involved. We need to identify the accounts, that is here rent and cash, and determine the type of accounts. Means we need to classify the accounts as assets or liabilities or equity or revenue or expenses. Here rent, that is related to expense, and cash is asset. After that we need to apply debit and credit rules. See, rent expenses account debit, that is debit means expenses are increases, that is rupees 800, and cash account, that is asset which decreases because we are paying the rent in cash. Okay, I hope this example is clear to you all. So here our first step, that is identifying the transactions, and second one is analyzing the transaction. Now we will move to the third step, that is journalize the transactions. Fine. Next step, that is journalize the transactions. See, enter the transactions in the journal. In the journal, that is we will call as book of original entry. We'll call journal that is book of original entry. We need to enter the transactions in the journal in the chronological order. Fine. Now we will check the format of journal. What is the format? How we have to enter the transactions? See, first here date and particulars, ledger folio, debit amount and credit amount. This is the format of journal. So here I will explain one by one. In the first column in a journal, it is date on which the transactions took place. First we need to enter the date, okay, on which the transaction is took place. And next in particulars column, what we have to do? The account title to be debited, it is written on the first line here. Okay, the account title to be debited, it is written on the first line beginning from the left hand, and the word debit, that is DR, it is written at the end of the column here. We need to write the debit here. See, debit. Fine. And what we have to do? The account title to be credited, it is written on the second line here. This is first line and this is second line. Leaving sufficient margin on the left side here. Leaving sufficient margin on the left side with a prefix to. Fine, here I will explain this one through one example. See, I will take the same example here. Payment of rent for rupees 800 in cash. We will write the date. First we need to write the date, right? That is 2024 October 10th. What is the entry? Rent expense or rent account. See here. Rent account. What is the rule? The account title to be debited, it is written on the first line beginning from the left hand corner, and the word debit is written at the end of the column. See here, rent account debit, and next the account title to be credited, it is written on the second line here in the rent account in the first line, and second line we need to write the account title that is to be credited. Okay, after leaving sufficient margin on the left side with a prefix to here. Sufficient margins here. We will write to here. After leaving sufficient margin on the left side with a prefix to. Rent account debit to. What is the transaction? Payment of rent for rupees 800 in cash. Rent expenses account or rent account debit to cash. We are paying the cash to cash account. Fine. After that, and below the account, after that what we have to do? Below the account titles, means rent account and cash account, below it we need to write a brief narration describing the transaction. See here, what is the transaction? Payment of rent for rupees 800 in cash. Now we have to write a brief narration describing the transaction. Now we will write. See here, in brackets we need to write being rent paid in cash. Fine. This is about particular column. I hope this is clear to you all. And now we will move to the LF. LF means that is the ledger folio. It records the page number of the ledger book on which relevant account appears. Fine. and after that debit amount and credit amount. Debit amount, that is rupees 800, here we need to write, and credit amount, that is cash also 800. Fine. This is about journal. This is the format of journal. Okay. After journalize the transaction, the fourth step, that is post to the ledger. Okay. So after transfer the journal entries, we need to post the entries to the ledger. That one we will call as book of final entry. Journal we will call it as book of original entry, and ledger it is book of final entry. So because it's where transactions are permanently recorded. Fine. So post each transactions to the relevant account in the ledger, maintaining the debit and credit balances. Fine. So now we will see the format of ledger. See, yes. See here. This is the format of ledger. First, date, particulars, JF, amount, date, particulars, JF, amount. Here debit, here we need to write the credit. Now we will learn one by one. So, here date will come. On which date? We will have to enter the transaction on which date it will take place. Fine. After that, particulars. So before that, we need to write the name of the account, title of the account, the name of the item that is written at the top of the format as the title of the account. Fine. After that, debit and credit. It means debit side of the account, that is left side here, left side, and credit means credit side of the account at right side. Fine. And now we will move to the next, that is date. Year, month and date of transactions are posted in the chronological order in this column. And after that, particulars will come. Here we have to name the item with reference to the original book of entry. Original book of entry means, see here, that is journal, book of original entry. We have to refer the journal here, okay, written on debit and credit side of the account. Fine. After that, JF, it means journal folio, means it records the page number of the original book of entry, means journal, on which relevant transactions is recorded. So this column, it is filled up at the time of posting. Fine. And after that, amount, we need to write the amount. After that, same, see here, date, particulars, journal folio and amount, that is credit side. This is debit side and this is credit side. Fine. So in the upcoming classes, I will explain how to post entries from the journal to ledger. So in this class, just I will explain the steps involved in recording the transactions. Fine. So here, first step involved in recording the transaction, that is identifying the transaction. Second one, analyzing the transactions. And third one, that is journalize the transactions. Fourth one, post to the ledger, from journal to ledger. And after that, fifth step, that is prepare trial balance. So here, after all transactions are recorded, we need to prepare a trial balance to ensure total debits that are equal to total credits. Fine. After posting from journal to ledger, we need to prepare the trial balance. It ensures that total debits equal to total credits. It ensures that total debits equals to total credits. Fine. Next step, that is adjust entries only it is if needed. Fine. We need to adjust the entries like any accruals on any deferrals or depreciation or errors at the end of the accounting period. Only if needed, we need to adjust the entries. And next one, after that we need to prepare the financial statements. Fine. We need to prepare the financial statements. So now you are able to see, right? Yeah. See here, after fourth step, fifth one, that is prepare the trial balance, that is to ensure total debits that is equals to total credits. And sixth one, adjust the entries only that is if needed. And after that, seventh one, that is we need to prepare the financial statements. Here in preparing the financial statements, we have to use the adjusted trial balance to prepare income statements and balance sheet and cash flow statements. Okay, here we need to use the adjusted trial balance. Fine. This is about steps involved in recording of transactions. So, first one, that is identifying the transactions, analyzing the transactions, journalize the transactions, post to the ledger, and prepare trial balance, adjust entries only if needed, and prepare the financial statements. For this, we need to use the adjusted trial balance. I hope this concept is clear to you all. If not, please leave a comment. Thank you.